Hi everybody, this is Dan at Theta Trend. Today is October 10th, 2013. It's about 5:30 a.m., which is Mountain Time, and it's 2 hours or so before the markets open. This video is going to be a run through of a trade I opened yesterday, October 9th, on FXE, which is the ETF for the euro. And before I get into that, I just wanted to let everyone know that the Theta Trend was a system that I wrote to explain how I use options for trend following. And if you go out to the Theta Trend website, which is www.thetatrend.com, there's a link there where you can download the full PDF that goes through the system. And some of these things will probably make a little bit more sense if you read through that document. But so going back to the trade, this is FXE. This is a daily chart of the euro year to date. And it's sort of interesting to see, this is really chopped around a lot in here. You see all these direction changes where we're going from long to short, back to long. And that makes it a hard market to trade when it's doing that. It's much easier when the trend is long and goes on for a long time. But at any rate, right now we have a long signal in here. And this is my stop level, this 132.91. And you can see I have an alert here in my software to alert me if price gets down there. And I like to enter these vertical spreads on pullbacks. And yesterday we got this little shakedown and the risk reward was really good, so I threw on a trade. The other benefit is that if price reverses on me here, I'm going to take a lot less heat if I have a reversal, sort of like what happened here. If I sell the vertical here and get, shaken out of the trade in here, it's going to be a lot less painful than if I open the trade down here and get shaken out up here. So let's hop over to the risk graph and take a look at the vertical I sold. So this is the vertical I sold, and this is a 5-point vertical. I sold the 132 and bought the 127 put, and I got a credit of $100, so a credit of 1, and my maximum risk on this trade is $400. But if we go back here and recall, our stop level is at this 132.92 level, and so a close below that is going to be where I'm out of this trade. And so let's go back and see if we were to come, and this is the live price here, 133.81. I'm going to move this down to 132, try to get it into the area of 132.89. That's close enough for our purposes. So if we get down to there, we're looking at a loss, if that was to happen today, of say $15 or something plus commissions. So the amount of heat I'm planning to take on this trade is fairly low. What I'm looking to do is I'm looking to capture about 80% of this premium. So $80 or so. After commissions, I'll be down around, say 74. And so I'm willing to risk, in the low 20s or something to make 74. So the risk reward payoff is really good. And I just put an article on expectancy on the Theta Trend website, so you might want to check that out as well for how I think about trading and how expectancy matters. But we're out into December on this vertical, so we have about 72 days or so on the day that I entered the trade. You can see here, so we have 71 today. And I'm going to be putting up another video that discusses how the width of your vertical spread matters in the profitability of your trading system. And this is just sort of a preview of that, of how things are going to be changing from a 2-point vertical to a 5-point vertical, I think, going forward. So I hope you found something interesting. Please visit me at www.thetatrend.com, download the system, and let me know if you have any questions. Dan at thetatrend.com. Thanks.